Cruise the News. And yes, it's a total ripoff of CTI. I don't know if you've watched Andy Frisella and DJ on the Real AF podcast. Don't worry, guys. We don't say the F word nearly 1/10 as much as those guys do. At least not on the podcast, right, Elijah? I mean, I have to keep it. I think we do a pretty good job of keeping it as clean as we can, right, on the day to day.
We
So
we are in the mortgage biz, so we do our best. Yes.
that's exactly right, man. Guys, if you don't know us, my name is Joe Wiggins, and this is Elijah Bicondova. We work together at ARE Mortgage Team. We are a mortgage brokerage based in Southern California, but we have a national reach. So the idea here is this is a great podcast to learn things that you might not know about mortgage, real estate, things related to finance, as well as just interesting things. So sometimes we'll have guests on that have been successful in one field or another. Other times it'll be a little bit more educational, maybe share some success stories of people who have been able to create some wealth through real estate, or people who have become maybe first generation home buyers, really designed to kind of inspire people to take action and build wealth for their own families and do it in really the smartest way possible. That's really what we're about. So if you get something out of this, please share it with somebody, subscribe to the podcast. We're happy that you're here. And with that said, we're going to get right into Cruise the News, which is another thing we do, right? Where we just take a handful of stories from the headlines, and we just kind of give you our take on them, cut through. If you're like us, a lot of times you're bombarded with stuff and you end up turning it off after just a few minutes of trying to listen to it. So with that said, Elijah, I'm thinking we should jump in to this one. And guys, I'm going to share my screen. At least I'm going to attempt to. Let's see here. And we're going to go into the median home price. And this is like huge news, man. Oops, I just clicked away. We don't want to talk about cheeseburgers.
Oh, that looks good.
Yeah, that's kind of making me hungry right now, man. I'm not going to lie. So sorry for all these ads, guys, but this one comes from USA Today. So, they've got a million advertisements. So Amex, please send your royalty check, just 50% to Elijah, 50% to me, and we're good to go on that. But guys, the median home price for a house in California just hit $900K. Elijah, what do you think about that?
It's a little scary, I would say, just because reading this article, the national average, as you can see, there's about 407,000.
Yeah.
So we're pretty much double that with a little bit of cushion there here in California. So as somebody who works in the industry and helps a decent amount of families, it's a little concerning to see such a high number, just because how competitive it's going to be for new buyers.
Yeah, man, because you and I mean, we see the payments, right? And so I would say, looking at this from our desk, or, if someone says, hey, Joe, or hey, Elijah, I want to try to buy a house, and in my area, it's going to cost me 950 grand. We're automatically going, dude, have you been saving money for a long time? Maybe, right? To be able to afford it, not necessarily qualify. We could do minimum down depending on the county you're in.
Right.
But more for the affordability factor. Either you're going to be having to own real estate already, or you're going to have to be making just a ton of money and trying to get into the game, right?
Exactly. I guess a better question, and maybe Joe can speak to this a little bit more, is, what are the factors that kind of play into this here? At least for us here in California, why are we seeing such high prices right now?
We're seeing it because of inventory, really, and the biggest reason, what really kind of created this, happened in 2020. It was COVID. It's when the rates fell to historic lows, right? So if you owned real estate before the rates dropped, or if you were able to buy real estate, which got real crazy for those trying to buy real estate during COVID, you know exactly what I'm talking about. Those are the days of 20, 30, 50, 100, 200,000 over ask price just to get your offer accepted. Why were people doing that? Because of scarcity inventory. There was no inventory, but at that point in time, the rates were crazy low. So, oh, I'm adding another 100 grand to my
Right.
loan potentially. Hmm. It's kind of like a negligible increase. But when you're talking about a loan size above 500,000, and you're talking a jump from 2.5% interest rate to 6.5, that's a game changer, man. And just, you know, so that's really why. If you have one of those low rates, you may really need to sell your house. But you're going, okay, you're doing the math. You're saying, all right, I can sell my house. It's appreciated quite a bit, but I'm going to be trading in a $2,500 a month payment in a very expensive neighborhood potentially and buying my dream house, but my mortgage payment is going to 4 to 5x, right?
Right.
And so that is basically, in my opinion, that's why you're seeing this rise in the median home price. And I'm not saying that people shouldn't sell their home. I mean, you still have things that happen. I mean, life still happens. Life doesn't care what the interest rates are doing or what property appreciation is doing. But if you look at here, the thing that I find kind of crazy is that a lot of the naysayers that for people that were bidding over ask during COVID, they're like, oh, values are going to tank. Well, in California, we're up almost 6%. Um, just from April to March, and 11.4 year over year, right? I mean, that's crazy.
Yeah.
There's not a lot of other things that you can invest in unless you're some type of crypto wizard or want to take a lot of, maybe risk in the market or something like that. But one thing I have noticed, so Elijah, is real estate is always hyper local, and it's always best to talk to people that are in your current market because I keep hearing about areas of Texas, like specifically Austin, and in areas of Florida where values are trailing back, and inventory is starting to rise.
Rise.
I really don't see a lot of that happening in California. I think the rates are going to have to get lower for that to happen. Um, and not just a little bit lower, like substantially lower for
Right.
inventory woes to go away in California. Um, but there are some things that we can do to create affordability. And I think that's really where dealing with an expert right now makes a huge difference. Elijah, a lot of times on our analysis, we'll show a temporary buy down structure because if you're able to negotiate that maybe on a home that just had a recent price reduction, a lot of times consumers maybe in these markets, and I'm seeing it in even San Bernardino, Riverside County, where maybe something hit the market in a really, let's just call it optimistic price point. But you run the comps and you're like, yeah, is that place worth $1 million? Yeah, pretty close. I mean, it's a nice place or whatever, but the seller's motivated for one reason or another. They drop the price to, 950. Well, does that mean that the home is now suddenly only worth 950? No.
Right.
So in a case like that, you could be creative, step in as a buyer with the right team and say, well, what if we offered 975 or 970 and asked the seller to cover a payment subsidy in the form of a temporary buy down for the next 2 years that makes this monster payment a lot more affordable, you know, during which time, the rates come down. The,
Right.
the reality is, as you know, is most people financing real estate right now are probably not going to have these loans very long.
Right.
I think we're talking somebody who's buying, right now we're recording this in May. Somebody who's buying in May of 2024 might be exiting that loan by the end of the year.
Right.
I
Right.
mean, it is an election year, right? Thank God.
Exactly.
Yeah, we're not going to get started with that. I mean, I'd really love to actually do a podcast on that stuff, but we'll leave that alone. So let me stop sharing this and let me go to our next tab, which is why does the damn DOJ hate the real estate industry? Like, bro, what did we do, man? Like, is it because like Trump was associated with real estate, right? It's like they want to go after the industry where he made a lot of money too. It just absolutely makes no sense. Um, I'll read a little bit of this one, EJ, and I'm curious to get your thoughts just because I'm old as hell. You're not. And it's always nice to get somebody's fresh
Sure.
opinion on something like this. Um, me when I was your age, dude, I mean, or and younger, I always thought, man, the Department of Justice is like the beacon of light, shining the light of justice in all the
Right.
dark, seedy corners, right? And now it's like, oh, you're making a lot of money? No, that ain't right. We're going after your ass. And it sure feels like that's what's happening here. And so, for those of you that have been like hiding under a rock for the last 2 years, or maybe don't just don't give a rip about the real estate industry at all, um, NAR, National Association of Realtors, settled a case that was basically like a price fixing, case. And their whole premise of the case was, in the multiple listing service, or the MLS, when somebody goes to sell their home, um, the real estate agent that lists that home for sale, usually has a conversation that goes something like this: Mr. and Mrs. Seller, whoever, you're going to sell your home. I think it's worth X. Keep in mind that you got to pay me my fee for marketing your house for sale and doing all the things that I'm going to do that. As well as, you've got this buyer's agent who's going to represent a home buyer. We've got to pay them too. And so, way back when dinosaurs were buying real estate, um, typical commission for each side was 3%. So 3% of the sales price would go to the person that listed the home for sale, known as the listing agent, and 3% would go to the seller or the buyer's agent, right, who's representing the home buyer. You've always had the possibility of having what they call dual agency, which is when the listing agent and the buyer's agent are the same person, which in my mind is always, you really need the right agent for that, somebody who is
Right.
incredibly ethical, because it's kind of like going through a divorce and you both have the same attorney, right? They don't allow that, right, for a reason. They call it conflict of interest. So, with that said, uh, basically what this part of the settlement was, NAR agreed, hey, in the multiple listing services that we have, um, we can no longer say, hey, on this listing, the seller is going to pay the buyer 1%, 2%, $200, 3%, whatever the case may be, because what they found and what they saw was like, if you have 10 homes listed for sale, right? And 8 of them are paying 1% buyer's commission and 2 of them are paying 3% buyer's commission. Which homes are you think are going to get shown more?
Right.
If you're a buyer's agent, now a lot of people will argue that, and I know plenty of amazing buyer's agents that would be like, I don't care if it's 1%, right?
Sure.
Because I'm going to be able to negotiate. If my client, if that checks all the boxes for my buyer, I'm still showing them the house. So I think their logic is flawed on that. I think the perspective that they take is that, you know, realtor bad, greedy, evil. And Elijah, you've been doing this long enough now where you've met some of those
Right. Right.
agents, but by and large, I mean that's not my experience. You know what I mean? So the DOJ has been quiet on this. And this article came out. This is from The Real Deal, which is nationally syndicated. I guess we have 2 free articles left, EJ. We're going to have to figure out where place to get this from. So the DOJ was real quiet. And then this fool, I won't say fool. Okay, so this guy comes out, a DOJ representative, and says, we believe offers of compensation should not be made anywhere, but certainly not on the MLS. So what the DOJ is doing by saying this is saying it's not enough to eliminate it from the MLS. We don't want it disclosed anywhere. So what a lot of people were planning on doing, obviously, is real estate, as you know, Elijah, is all about communication, right? So if I'm a buyer's agent, my buyer really wants the house on Jones Avenue. You're the listing agent on Jones Avenue. I'm going to call you. Hey, Elijah, my client fell in love with your house. They want to make an offer. What's the seller paying for buyer commission? And you would tell me, right?
Right.
Well, hey,
Right.
we talked about probably somewhere around 1.5%, 2%. And so what's happening is it's kind of forcing, agents to, especially buyers agents, to articulate their value proposition a lot more clear to home buyers, right? But what the DOJ is doing here is really pretty stupid, I think, because they're setting the tone for realtor bad, evil, greedy still. That's basically what they're broadcasting here. I mean, what do you think about this, Elijah? I used to love the DOJ, and with all the stuff that has been happening in the last 2 years, I'm just like, who are these fools, and how did they get their positions, right? And I
Yeah.
mean,
Yeah.
maybe I'm crazy or just like the old guy or whatever, but what do you think, man?
To be honest with you, I think this is something like you mentioned earlier. I feel like it's kind of targeting those bad characters in the game, and they're there, right? Of course, as with every industry,
Yep.
but more so, I feel like it's it's tough for me to say because everything that we do is we disclose all of our stuff,
Yep.
in terms of our commission, what we make, all that stuff is disclosed up front. Something we've been doing for quite some time now, you know.
Well, really,
Um,
since 2012. See, that's the thing. Like, a lot of people will draw, and not to interrupt you, but people will draw that parallel. Well, lenders went through this crap in 2012, 2011 when TRID was enacted.
okay,
And
yeah,
at that
yeah,
point in time, it was, financial crisis of '06, '07, '08 was created by bad banks and greedy lenders and all those greedy banks and all those people that were doing loans, right? Which was weird. And I know you didn't go through that. And so they completely revamped everything. And when they did that, we were doing the same thing that a lot of agents are doing right now, which is like, holy crap, you
yeah,
know and you really don't realize how like wild west it was until a regulator comes in and steps on your neck, right? So lenders have already been through that, and that's part of the reason that even though we always provide an even higher level of transparency, that's why lenders are forced into being a lot more transparent now than we were, say, prior to that change, right? So I don't think it's going to be all bad, but I'll let you finish your thoughts. So you think it's better because they're kind of going after the bad actors.
yeah. I would say so, but at the same time, there are those top producing agents that I think earn every dollar, right?
Yeah,
I mean, every single dollar.
yeah,
They're able to put you in contact with the right people. They can guarantee, hey, this is what the process looks like. We're going to be closing on this day. Buyer's fully vetted. We're ready to go. And we
right.
just saw this recently on a recent transaction, right? We were working with a top dog out in San Diego,
Yeah,
and just all around it's night and day
yeah,
in terms of communication, which is probably single-handedly the most important thing in a transaction. Um,
yeah.
so
Well, it's
you
kind of
know
like the consumer doesn't know what they don't know, right?
exactly,
And so I
exactly,
think we could all do a better job of trying to articulate value. It's just sometimes it's difficult to do that without sounding salesy or coming across as pushy or hey, you don't know what you're talking about type of thing, right? So it's
right,
it's really it's an art form is what it is, and which I think is why reviews are so important, right?
very important, correct,
Because
yes,
it gives people that might not know you or know a realtor, hey, 100 other people can't be wrong. You know what I
right,
mean? If
right,
the trend is, hey, these guys know what they're doing and these are all the things they did for me, I think right now more than ever, reviews are just incredibly valuable to anybody in any profession, but especially real estate,
yeah,
especially real estate.
absolutely,
Um, and so with that, I know one of the questions that I've gotten quite a bit from buyers that we work with over the years is, hey, how does my real estate agent get paid? Right? Like I understand what you're telling me. So my cash to close is going to be $32,000. Let's just say my payment's going to be X. If we close in June, I know my payment's going to be August 1st. Right? I know all this because you showed me all of this, but the guy that's been showing me houses, right, and driving me around in his car, or meeting me all over town, how do I pay him or her? And so it's kind of like you can tell that a lot of agents have never really had that conversation
right,
with their clients. And I think it's not for a nefarious reason. It's just because I think a lot of agents look at it like, well, the seller's paying me. So, Mr. Buyer, you're not paying me. And I think this court case brings the argument that you can say, well, the buyer is kind of paying because that commission is factored into that end sales price,
Correct.
right?
Yes.
So that's,
Yeah.
I get it. But um, I want to mention we do have, if you're listening to this in May, we have a webinar coming up on, is it the 30th?
It is, I believe the 29th is last
Is it?
Wednesday.
It's a Wednesday, right?
Yeah, the 29th, the last Wednesday of May.
Okay. So the
So
last Wednesday in May,
next week.
yeah, we've got a webinar that's designed to actually give buyers agents some ideas and some actual things that they could take away from the webinar that adds additional value, transparency, and clarity to their intake process. And now more than ever, I think it really has a lot to do with who you partner up with as your lender, right? Because if I'm selling real estate, I mean, we do an analysis for each and every customer, as you know, and some clients get 60 different analyses, right? Because they looked at so many houses, right? Which is cool. I mean, hey, you got to know what your numbers are before you make an offer, right? But if I'm a smart buyer's agent, I want that for my buyers. I want that's really a big selling point and a differentiator. If you can say, hey, every one of my buyers is going to get a customized analysis based on their qualifications, their targets, and their goals that's specific to them. It's not a shotgun approach. And we're going to do that to make sure that you execute in the most intelligent way,
Right.
right? Still your choice. And so if you're a consumer listening to this and you say, well, I've got this person or I know this person and I'm going with a 5% down conventional loan. My question, if I'm a buyer's agent, is why?
Exactly.
Why? And if you don't know why, you need an analysis.
Yes.
Simple, right?
Yes.
Pretty simple. Pretty simple. So it's all about the info, right? What's that song? It's all about the Benjamins, baby. There ain't no party like a what? Oh, man.
To speak to that a little bit more, I would say that it has to do with the experience, and that's something that we definitely try to. Sorry, my cat's likes to be in the picture too, but
Hey, Elgato.
anyway, it's about the experience,
Yep.
and that's something that we try to hold to a different level with each and every one of our clients. I would say,
Yep.
not to dog on any other lenders out there, but there's multiple times where we have, somebody wants to see what we can do for them, and usually the first thing that we ask is, okay, well, what did they send you? What does your analysis look like? And the first response there is analysis. Like
Yeah.
what? So
Right.
it definitely allows for some higher level planning for sure.
Yeah.
And this is such a big decision that we don't want you to feel uncomfortable or, in a position of not knowing what it is you're going through with, um, before the transaction closes or after it closes, right? Nobody
Right.
likes that feeling, of, oh man, I just got taken for a ride or something like that. No,
Yeah.
we want to make sure you understand every step of the way, and we're there for you, you know, open to close and thereafter.
Yeah.
So,
So funny story, real quick. I started doing the total cost analysis about almost 20 years ago now, right? It used to look more like an Excel spreadsheet, and the video component kind of came out, I want to say around 2013. So about 11 years of video, and we have thousands of videos recorded for clients that we've helped.
right.
But a lot of people would ask, like when that was like a real crazy thing, like in 2016 when you're sending somebody a video, they're like, "Why do you do this? Like, I love it, but like, why do you do this?" And it's like what I used to say. It was almost like scripted after a point in time because I'd have to say it so many times. But I would say, what my biggest fear is helping you right now is that I'm going to see you at the grocery store 4 years from now. And during that time, you're going to talk to somebody that does what I do, or maybe a really smart CPA or financial advisor. And they're going to say, why did that fool put you in that loan structure? Didn't you know that you could have done X, Y, or Z? And dude, like, could you imagine how horrible you'd feel at
Awful.
in
Absolutely. I
person
mean,
and somebody says, and you're like, as in my seat, in our seat, you're like, what did I do? Like, did I screw up? Right.
Right.
And so I love the analysis for that reason, because it totally eliminates like our biggest fear of not being able to help somebody in the best way possible.
Right.
Anyway, at the risk of selling analyses too much here, we'll jump to our third and final, which is current mortgage rates. And we'll just end on that. And a couple things to discuss here. This is from Money Magazine Online, and they're saying the week of May 20th to May 24th, the average 30-year fixed rate mortgage is 7.703. I'm just going to ask you an honest question, Elijah, because you see what we lock people in at. What do you think our average rate is that we give somebody?
Below a 7 for sure.
Below seven,
Um,
right? So, guys, another reason, going right back to the analysis train again. Another reason that you want an analysis is that somebody who's selling you a load of garbage potentially, and if you're a realtor listening to this, this happens all the time, right? And you should care now more about this now than ever before, providing value. And in fact, you could almost sell it as a value prop that you're going to review things like this to make sure that your buyer's not getting ripped off. So if I was a nefarious lender and I could give somebody, say, 6.9%, but I know the national average is 7.7, so I quote 7.5 and make a lot more money if I'm a correspondent, let's say, and not a broker, and I don't have to
mhm.
disclose, secret profit, right? Because let's face it, the comp rules are not the same
Right.
broker to banker. They're just not. The loan officer comp rules are, but not the company comp. Okay, there's a big difference there, guys. Big difference. Then an unwitting consumer could get totally ripped off. And then I've got for a refi, they've got it at 8.29%. So I that kind of tells me, because guys, like if you're doing a conventional refinance, like Elijah, as you know, they have these LLPAs, and I'm sure that was shocking. Then we could probably do another podcast just on how Freddie and Fannie get rich on low level price adjusters, uh, and complain that they need to increase them, right? Um, but for a cash out refi, I could see that. So this tells me that a lot of the refinances that are going on right now are probably cash out refinances for debt consolidation. And so just like an analysis for a purchase, guys, it's going to be in your best interest or in your client's best interest to get an analysis for a refinance too. Because a lot of times, if you do a line of credit that might be at 11%, but it's spread over 30 years, that might be a smarter play than going to some 8.29% rate on a brand new first,
Right.
especially with credit card debt nearing 30% right now. And also
Yeah.
DOJ, man, if you guys want to focus on something where people would start like cheering your names in a good way again, focus on credit card interest rate. For crying out loud, 30%? Are you kidding me? I mean, you guys are putting the mob out of business with that shit. So anyway, man, where do you think rates are headed, Elijah? We'll just end with that.
I would say definitely trending down.
Yeah, yeah,
That's just the equation that makes sense in my head. More so, not to like play into the well, I guess to play into the increasing housing prices. Right here in California, as rates trend down, I don't see housing prices dropping. It's also going to create like I mentioned earlier, massive amounts of competition, and then you run the risk of getting priced out, right?
yeah, yeah.
So, um,
I
rates have to
agree.
come down. It's that simple. Just because nobody's buying anything right now, so in
Yeah,
order to incentivize people to buy something, right, we drop rates.
right, right.
That's the way I see it, anyway. We got to balance the equation.
Yeah, I agree. And then part of the other thing is, I think that obviously it's an election year, right? And that's the big
Oh,
thing.
right, right,
Um, so chances are, I think they're going to drop for that alone. Whoever it doesn't matter who's in power. Whoever's in power wants things to be as good as they can. When people are in the voting booth, and that would go a long way, right?
Yeah.
Um, and the other thing, subscribing to the experts like we do, I think it's coming down to the unemployment numbers. The job numbers. I think you probably heard me say it 100 times. Is they're always revising them. The headline number comes out, makes it look like the employment market is so great, and
Yeah.
then what do they do 2 weeks later? They go, oh, whoops, just kidding. It was actually a net loss of jobs. Oh, and by the way, people have to work 2 jobs or 3 jobs. And so that kind of skews these employment numbers too. And I think that train is slowly coming to a stop. And I see a lot of real honesty coming in the employment numbers. And if you look back, if history is any guide, employment is kind of always the last shoe to drop, if you will, before rates come down. And
Right.
so I think for reasons that you stated and what we're talking about here, I agree with you. I think the trend is down. Um, I think the risk, if you're a buyer, correlating to that, don't get the wrong idea. If you qualify for something now, it's going to be in your best interest if you can get it under contract now. Because we're seeing these little lulls, right? We're seeing like frenzies and it's impossible. And then you see like a little lull, like a 2, 3, 4 week lull. And man, if you're a buyer, that's when you want to strike because
Right.
you'll be able to, chances are you'll be able to refinance and drop that payment. But if you wait for rates to drop, then you're going to have millions of other home buyers coming into the market because now they qualify better, right? So I think inventory is still going to be the kicker, but
Exactly.
if rates are better, maybe more people are going to be inclined to sell their homes and downsize, upsize, move, locations, life, right?
One thing I wanted to mention too is like with interest rates the way they are now, some people are it's too high, I can't do it, I don't want to do it right now. I want to wait for them to come down. Obviously, like we mentioned earlier, you do run that risk of obviously getting priced out, but Joe mentioned earlier, the program, the temporary rate buy down, right? Great
Yep.
way to have some interim affordability, which would still allow you to refinance, you know, 6 months from now, right? And then that money that's in that subsidy account doesn't get lost. It's applied to the principal balance of the loan. I think it's a great way to get in, and that's only if it's seller paid. By the way, I just want to make sure that's
That's a big thing, man, because I'm constantly surprised. I hear a lot of lenders talking about the buy downs, but they don't specify that. You know,
mm,
99% of the lenders out there that offer the temporary buy down themselves don't understand that if the buyer paid for that buy down, they lose that money. The only time they get it back is if the seller has paid it. Why is that? We have no idea. In your loan documents, though, I do know that there's a buy down agreement, and that buy down
correct.
agreement is the law of the land and gospel. And
Yes.
yours says, hey, if this buy down was not paid for by the seller, you are not going to get any return of any unused subsidy, right? And that's huge, guys. I can't tell you how many people don't know that and
Right.
could have a temporary buy down right now and we're told that they're going to get it back, but then they actually don't. Anyway, guys, as always, we appreciate you listening. We hope you got some nuggets out of this. We're going to be doing the Cruise the News episodes at least once a week. And so if there's anything you'd like to see covered on the cast, hit us up. We're pretty easy to find. Elijah and I really appreciate you listening. And if you found value, make sure you share this with somebody that might be able to benefit from it. And definitely subscribe, guys. We're trying to do all we can to gain some traction as a new podcast. We appreciate the love and the help. Even your outpouring of support after the very first episode was really cool. So we appreciate it, guys. And we'll see you on the next Cruise the News. See you, buddy.
There.